What is your credit score and how do you improve it? If you're getting a loan, for example, a mortgage, or wanting to take out a credit card, then you probably want to be asking yourself these questions. But they don't make it easy to understand, do they? Even the phrase credit score can be used in different ways by different people. So today, we're going to help you understand the information that matters to you. In this episode, I use credit score to mean specifically the numerical score that credit rating agencies give you, that 3-digit number you might have seen. And I use credit rating to mean how other organisations, particularly lenders, rate you and your credit worthiness. This could be your bank or a credit card company, and is primarily used to decide if or how you're going to be lent to. There are further nuances, of course, but to be honest, I really don't think it's helpful to go too deep into them here. So yeah, here we go. Hello, Tremaine.
Hello, Damien.
How's it going?
I'm all right, mate. How's it going?
I was going to call you Timian.
Why would you do that?
Because if you ask Siri on my phone to call you, I have to say, call Timian.
I always want to call you Tintin because of your hair.
Ah, this guy. Thank you, mate. So on that note, should we get into today's episode?
Let's do it.
We got a question from a listener called Simon. Thank you, Simon. Well, it's not really a question, it's more of a statement. So I'm currently in the process of checking credit agencies. One of the big 3 agencies just didn't have a file for me. I just feel this stuff is much more important than people realise, and it isn't taught anywhere. Discuss.
But it feel like GCSE English.
Yeah.
So I guess today we're talking about credit ratings.
Yes. Let's start by showing each other's.
You show me yours, I'll show you mine.
Not a competition I want to have with you,
We
mate.
see who's going to win.
Right. So I've got mine here. Mine's actually taken a bit of a hammering recently because I bought a load of stuff on credit, on debt. Like, I redid my studio, and rather than shelling out the money myself, I put it on a 0% card.
Nice.
So that's hurt me.
Yeah, pay for that tomorrow. Don't worry about today.
Yeah.
I still reckon your score's better than mine, though.
I got it here.
Go on.
So here's the big reveal. Mine is 781 out of 1,000, and that's with ClearScore.
Is that good?
I mean, it's all right. It says here that the average in the UK is at 555 out of 1,000.
That makes me feel so much better because my score is 578, and that is classified as poor. And I'm not poor, but apparently my score is poor.
You're not poor because you've been blowing all the other people's money.
Yeah, but I mean, I don't even have a credit card. So like, it would be, let's get into this, because how is it that I've got no credit cards, but I've got a bad credit score?
Should we try and make you feel better first?
Can we?
Let's go around the room and ask some of the
Let's expose some
thousands
people.
of people that are in this room that no one else sees what their credit scores are. Who should we start with?
I think we start with Jack.
Jack, the cameraman.
Yeah.
980 something.
980? What? Let me borrow some money and a credit card. What?
What is going on there?
That's insane.
Guy lives with his nan as well.
Oh, it's pretty much perfect score. Pretty much a perfect score almost.
Ruth fled to Spain because she's got bad debts.
Yeah, mine's 480.
Oh,
Yes, 418 below me. That makes me feel a bit better. Yeah, I know. But that makes me feel a bit
everyone
better.
at home is loving life at the minute, I reckon. Johnny, you're looking very nervous, mate.
Mine's good. 903.
903. Maybe Johnny and Jack. Yeah, Johnny and Jack should be leading
Turn it
the
upside
podcast.
down, that's a 306. That's a hard 306.
That's unbelievable. How have you done that?
Will is outraged.
Credit cards, apparently. I mean, I've got loads of credit. I've loads of credit cards.
So you owe loads of money
I
and
always pay them.
So secret is get loads of credit
be up
cards
to your eyeballs.
and
Just
then pay them
out.
all on time. Yeah.
So what have you been doing?
Just not paying things.
Okay.
Well, if we break down into what affects your credit
Don't
score.
forget Will first.
Of course. Will, what's your score saying, buddy?
867, baby.
867. So I'm the second lowest score, 867. Wow.
Yeah.
I appreciate you, Ruth.
Yeah, one's disappeared off the map.
Done a runner.
Yeah.
So first of all, I mean, what is a credit score?
So a credit score is almost like the number representation of what the agency that provides it to you thinks your credit worthiness is. In the grand scheme of things, it doesn't mean all that much. You know, people hold on to the score, and what I actually think happened was the credit referencing agencies realised that they could sell an extra service direct to consumers where they go, oh, do you want to see what we think about you? So all it is really is them saying this is how credit worthy we think you are, and we'll rank that out of 1,000 or whatever.
So you get to peek behind the curtain and see what they all...
I mean, you don't know. No, you don't get to peek behind the curtain, because what most people don't realize is most lenders will have their own criteria.
Oh.
They have their own criteria for making a judgment on.
So every business has a different criteria.
Yeah.
Or every lender has a different criteria.
Yeah, Barclays might say, these are the things that are important to us. And we run you through our own internal algorithm or process checklist. The score itself vary from whoever you use to get the score. So I think you use...
I use Experian.
Yeah. So, bad is bad in any language.
But I'm pretty sure, I don't think I'm going to go to 900 from 578 if I jump to clear score.
There's a chance. So, but yeah, bad is bad across the board.
So is that the Experian? We've got Experian, you use clear score. How many are there?
Experian, Equifax and TransUnion are the referencing agencies. They're almost like the big boys who make the scores. But then you have services that give you access to that. So ClearScore run off Equifax. I like ClearScore because it's completely free. And I think the user interface is nice. I think they make their money through then getting you to sign up to credit cards.
And recommend, because they always recommend you different credit cards and
exactly.
things like that.
But what you have is the three main referencing agencies and then lots of companies that will give you access to that score. You can even now get scores with lenders specifically. I know when I did a balance transfer recently, so I bought my studio on my American Express and then balance transferred the balance onto a 0%. So I get the points and a 0%. And within the MBNA or Virgin, they were saying, would you like us to tell you how we score you? Yeah. So lots of these places are offering these
extra additional
scores.
And what kind of things can they see what kind of things affect your credit score?
Shall I tell you what? Should we do a little quiz? I'll ask you first.
Let's go.
Yeah. I know.
Knowledge, wisdom. Let's go.
I'm going to go through it. I've already given some of them away. So this is a quiz from the lender's perspective. So what the lenders know about you. So let's go through it. If you have a criminal record, can they see that?
Oh, that's interesting. I hope not.
Might explain your rock bottom score.
I have no criminal record for the record.
You plead the fifth.
I plead the fifth. No comments. You can speak to my lawyer. I don't think that affects it.
Okay.
What if it's for fraud?
Oh, good question.
There you go. So I will say no, they can't see your criminal record, but if you've done something dodgy with money, they probably can.
They think you can if there's potentially fraud.
Yeah.
Okay. How about unpaid parking tickets?
No, they can't. Because otherwise I'd be on zero.
Yeah.
So yeah, they definitely can't.
And energy providers, and if you've switched?
I have no idea. Well, probably if you don't pay them, if you don't pay your gas bill, can they see it? Because is that a lender? I don't think. Yeah, they could probably sue energy providers.
Mm-hmm. And what about how much you have in your savings account?
No, because savings isn't credit.
Okay.
Right?
Yeah. So do you not think though that maybe they might be like, oh, you're more credit worthy because you've got a load of money?
I know they can see your bank account, like your main current account, but I don't think they can see your savings because they can't see investments, can they? Or can they? I don't think they can.
It's your quiz, mate.
I'm going to say no.
I'm just going to pretend I know all the answers.
Yeah, I hope you know the answers.
I'm going to read them off a sheet in a minute.
No, they can't see your savings.
Okay, fair enough. Okay. And how about all the shady videos you've been liking on Instagram? Frozen.
I don't think. No, they can't see your social media.
I can see those.
No, every time I comment on something, Damo's like, "I seen your comment." I was like, "Oh dear, I've been caught red-handed."
It's funny you see the the weirdest video come up, and then it's just T pops up as a comment below, being like, "What up?"
I like to engage with the Instagram community.
Yeah, that's funny. Okay, let's go through this. But to be clear, we will just see a score from the lender's perspective. What they get is reams of data on you. So they get hundreds of lines of data. They know quite a lot about you basically as an individual, and they can build a profile off that. Let's go through some of the things that they do have, and then we'll go through some of the things that they didn't.
Okay, cool.
Okay, so they obviously have the application form. One of the key points around the application form is to make sure there's consistency. If you're applying for lending, what people often do is they just bang down any job title, and that might not match in other areas, and they're doing fraud checks here. And if they think there's inconsistency, they'll be like, no, just get rid. They're looking to screen people out on that. So make sure it's accurate, up-to-date information, those kind of things. That can include everything from, postcode, salary, family size, any information that they've asked on there. So they can know quite a lot about you.
Okay. But they can't know certain personal things, right?
Well, they're asking that information.
They don't know if you got kids and stuff.
Well, they're asking you to give that information, aren't they? So, it's kind of like, they can't search that up. They want to know it, but it needs to be accurate, I would say. Okay. past dealings you've had with that lender, obviously. So any credit you've had in the past with them, anything like that. And then your credit files through Equifax, Experian, TransUnion. So those credit files collect information from multiple different sources, like the electoral roll. This is why getting on the electoral roll is good for your credit rating typically. When I worked in debt solutions, the way this was always positioned was they like you being on the electoral roll because it shows you have roots. So it's like, I'm registered to vote in this area. People who aren't, you're not settled. It just shows that you're kind of committed to an area a little bit, and you're like formally recognized as living there from a voting perspective. I'm guessing there's data that if you're registered to vote in an area, you're more likely to pay back the debt and things like this. So, Tremaine, you work in venture capital now, don't you?
They call me the modern day Deborah Meaden.
Plastic Profitas, more like. Pitch us our new sponsor, Sensate. Here you go.
Okay, great. Well, Sensate started off in Harley Street. It was a machine used to treat PTSD. And essentially it started off as a big vibrating sound bed. And it's really used to treat the vagus nerve, which connects the brain to the stomach. And essentially it manages your reaction, your body's reaction to stress.
Is that why they say you feel sick to your stomach when you're stressed?
That's right. Who's pitching who here?
Just channeling my inner Peter Jones for you, mate.
Anyway, they miniaturized this massive machine into a device called Sensate. So you put it on your chest for 10 to 30 minutes. It comes with an app, which plays you nice, relaxing meditation music. Kick back, relax, it relieves some anxiety, get a nice little kip, bosh, job done.
So how do people find out more?
If you struggle with anxiety and want to try Sensate, head to getsensate.com/makingmoney and use the code MM10 to get 10% off. All right, what else do they know about you?
So we're still on the referencing agencies here. So the lender will go to the referencing agency and say, can we have all of the information? So they'll have like the electoral roll, court records, account history, typically for 6 years. So, you know, they can go back up to 6 years. And
when you say court records, criminal court or like financial?
Good question. So more like CCJs and things like this. But fraud, yes, financial fraud, because I think that's relevant to the lending process. But I don't think that they can see criminal convictions.
For our listeners, CCJ stands for County Court Judgment. Don't ask me why I know that. Might have collected a couple over the years.
You just love a day in court, don't you?
I love a day in court, mate. No, I don't turn up and then they hit me with the fine.
Yeah, well, good point there. So if you have got CCJ action against you, most people don't attend the court hearing. Yeah. You should go.
No, I know.
Because if you don't show up, they just go, oh yeah, well, they're not bothered. They're giving a CCJ.
Student life, mate. It was student problems. Now I'm a good boy.
Yeah. And then we've got the energy supplier. So there's some information there. I think in the recent past, they've added energy bills onto certain utility bills have gone onto your credit score. Or if you've switched suppliers, they can see that as well. Again, as well, if there's debt from energy suppliers that's gone to a CCJ, they'll be able to see that. So with your parking fines, they wouldn't be able to see the fine, but if the fine turned into a CCJ and there was a judgment against you to collect on that debt, they would be able to see that. And with those kind of actions, they last for 6 years on your credit rating again. And it
adversely affects your credit score, I'm guessing.
Oh, yeah. There's not much.
Are they bad?
Yeah, pretty bad.
Like really bad?
Yeah, pretty bad. Yeah. So before we go on to what they don't have, we'll just touch on this because you've asked. There's kind of like a hierarchy of impacts on your credit score. But in my experience working in debt solutions, if you get any of these, you're going to instantly be subprime. So default notices are normally once you've missed 3 months worth of payments on a debt, they will write to you and send you a letter, a default notice to say you've defaulted on the debt. We're removing your ability to use it and you now owe us the full balance back. So if you had a credit card with £1,000 on you, it's cancelled, you owe them £1,000. That default notice will last for 6 years on your credit file. If you pay it off within those 6 years, it shows as satisfied. All that simply means is you paid it off, but the default still stays there.
Yeah.
Beyond the default, let's say you don't pay them and they chase you more and more and more and it goes to a debt collector. They can eventually take you to court and through the court process apply for a CCJ. And that's the county court judgment. That's an action against you. That is more severe than a default notice. Again, it lasts for 6 years. Everything does. But, you know, I didn't experience lenders that were like, we'll lend to people with default notices, but not to people with CCJs.
So they'll lend, they'll just charge you more.
I'm going to struggle to borrow with both, really. I mean, that might have changed now. I worked in this space 10 years ago. The problem with a CCJ is it comes with, so a default notice and debt collection and things like this, they have no legal right to collect. They can't come in and kick your door in and take your stuff or whatever. You know, debt collectors are, they're just glorified call centers trying to get the debt. They normally buy the debt off the and try and collect on it. Whereas a CCJ, they can then appoint bailiffs and things, and these have much stronger rights for collection.
Yeah.
The court has basically said, yes, you are owed that money. We will go get it. So the bailiffs and things, they're the more severe action. Beyond that, in terms of impact, are debt solutions like an IVA, bankruptcy, debt relief order, a trust deed if you live in Scotland. All of those are forms of insolvency. So they wipe debt. I often see adverts which are like, wipe your debt for £50. What people don't realize is they're basically going bankrupt with that solution.
And that really affects you.
Again, yeah.
Worse than a CCJ.
Yeah, because you basically, I mean, if you think about it from a creditor's perspective, if a person's got a default notice, you might think, well, maybe they hit hard times. If a person's got a CCJ, you're like, they've ignored it, but then now set up a payment and they're paying it back. If they've gone bankrupt, you might be like, they just wiped the debt. So yes, they might have had a terrible situation, blah, blah, blah. But am I going to lend to someone that's just had all their debts wiped? You know, that, view it through that lens. Lasts on your credit file for 6 years, bankruptcy. But the problem is a lot of lenders, so mortgage applications will say, have you ever been bankrupt? You know, because they can't see past the 6 years, but they want to know because I think...
So all lenders can only see 6 years?
6 years of history. So basically, it's not fair to penalise someone for their whole life for past discretions. Otherwise, I'd have been done in my 20s, you know? So they say 6 years to give people a fresh start, but then mortgage applications will say, have you ever been declared bankrupt? And if you don't say yes when you have, you could be argued that's mortgage fraud because you're lying on the application. And if they ever found out in the future, they could say, we're taking the product back. I just think it's important that people understand those solutions, the progressions of impact on credit rating. The whole thing will last 6 years, or any of it really. But any solution that wipes debt off is a form of insolvency and is very serious, you know. So anyway, sorry. We segued there, but while you were asking, so yeah, mate, you got 5 years, 11 months before yours turns itself around, unfortunately. Okay, let's look at what the lenders don't actually know about you now then. They don't know your race, religion, or ethnicity. So I'm pretty obvious why they don't need that information.
I mean, with a name like Tamena Cole, I'm pretty sure they could guess that I'm not Caucasian. Yeah. I mean, that's just a shout. That's pretty cool that at least it minimizes people like...
I can imagine in the past there were some awful decisions made around race and lending and things like this.
Like, we don't want to lend to a Mohammed, or we don't want to lend to like a whatever.
Exactly.
So that's pretty cool. They can't see it.
Who you are married to or living with. So they don't know who you're living with, but they can if it's linked, if you've got a linked account. So one thing to consider is linked accounts can drag you down. If you have like a joint bank account with someone who is reckless, the association will impact you.
So the good association won't impact you, but the bad association...
I mean, the good one might help, but you don't want to be the bad one.
It's a bit late for that, mate.
Blame it on the missus, mate. Blame it on the missus.
Drag down to school, get a nice little balance in the middle. That's what I do.
Yeah, just average it out. So in the past, when I had housemates, we had like me and a housemate, we both rented a place and we had a joint account to just pay all the money into. And yeah, there was an impact there because when I moved out and stuff, it was still technically linked to them, even though I hadn't been. So yeah, worth considering. They can't see into your savings accounts.
Yay, I was right, told you.
Yeah, because it's not relevant to the ability to borrow, even though it is.
It should be though. I always tell them, if you've got like $500,000 saved up and you're like, I want a credit card, and they're like, oh, you can't, you've got bad credit rating. I'm like, yeah, but I've got loads of money in savings, but they can't see that. You can't use it.
You know they can't because they ask for proof of funds, don't they?
Yeah.
But like, this is why a mortgage provider will ask for proof of funds and say, can we see that you've actually got the money and where that's come from? Like you say, it is relevant, but would you want a phone bill company knowing how much you've got in savings and stuff, you know? They can't see student loans, except pre-1998, it says here. Again, no, unless you had a county court judgment for lack of payment. Criminal records. No criminal convictions are listed apart from fraudulent ones. Fraud, financial fraud.
Makes sense.
Yeah. They can't see council tax arrears, parking fines, or driving fines.
Oh, sweet.
It says here that councils don't share data about your payment, whether it's good or bad. If you're in arrears, it won't affect your credit scores. I mean, that's interesting, isn't it?
Yeah, because I still owe Manchester Council from Salford like money for my council tax. They're not getting it. I live in London, mate. Good luck with that.
Yeah, it's so far away. Well, now they've cancelled HS2, mate. Like,
Yeah, exactly.
no one's ever coming down again, are they? They're turning off the water next month as well. They're going to spend it all on like a little new golden arch outside Putney Tube Station. But
You
yeah,
come up with this stuff.
yeah. Well, that's how it feels if you're a northerner.
You know they say money doesn't buy happiness.
Of course.
I think that lies. It's dead wrong.
Well, I think it's probably a bit more nuanced than that, isn't it? They say it's about experiences.
You're experiencing sudden hair loss.
He's such a savage. Well, this is true. I've been using manual to kind of combat that. I've been so impressed with the results, I actually asked them to sponsor the podcast.
Good man. How's it? How are you finding it?
Well, I mean, how are you finding it? I think it's good. My hair looks thicker.
Yeah, it looks a bit better, Tintin. It's looking thicker, more luscious, a bit like mine. If you're losing your hair and want to do something about it, like Damo, check out Manual. You can get 55% off by using the code MM55, and there's a link in the description.
Okay, back to the show.
Is there such thing as getting such a bad credit score, credit rating that you get blacklisted?
Blacklisted.
Yeah, can you get just like, no one's lending to you ever again, you're blacklisted?
I'll tell you a story that we used to tell our clients when we were offering them debt solutions, because people all the time would be like, oh, I don't want to be blacklisted. This is probably complete BS, but it sounds good. So it supposedly comes from a time when the high street and people would go to the butchers and then the greengrocers and things like this, and they would buy their food on tick or credit, you know. Yeah, they would say, you can have your week's worth of meat, come and pay me on Friday. And people that didn't make that payment, they would write their name on a black board and put it in the window, and that was the blacklist. So the other shop owners on the street could see that and go, oh, that person, we're not going to lend them sweet corn or whatever because they've not paid the meat man back. So that was the blacklist. Where this gets convoluted even further is it is public information if you've been declared bankrupt. It's still printed in a couple of newspapers. I can't remember the specific one, but there's a London newspaper that prints everyone who's been declared bankrupt.
Wow.
And you can search up the records, the insolvency register it's called. And on there you can see everyone that's been declared insolvent. So there is no blacklist. And yes, there are people that can borrow during bankruptcy, even though you shouldn't. This is why a lot of people get into trouble where, you know, they've been declared bankrupt and then they're found to still be borrowing and things.
Yeah.
So, but there's no like, oh, this person has been condemned, no one should lend to them. We always used to say to people before we were making them insolvent, you know, a credit rating is only good if you want to borrow. But that is true in a way, but it's not. So there's a lot of people out there that might be sat there going, you know, I don't want a credit card, I don't want a mortgage. So a credit rating is used to get credit, right? But first of all, if you're borrowing, a good credit rating will allow you access to better rates, longer interest-free periods on cards, better balance transfers, things like this. You'll get the better products. You've probably seen it when you go on and you do a comparison and it will offer you an advertised rate and it'll be like, you could get 5%. You click it and then it's like, nah, 55. That's because they've taken a look at your rating and gone, yeah, this guy's a melt. Like, whack up the rate. You know, so it impacts that side of it, but it can also impact jobs. So I worked in certain professions where I had to be credit checked.
I actually had that, yeah, with
normally in
one company.
investments and
It was
finance.
it was an American finance company. And
Yeah.
they wanted to know they did a whole criminal record, financial
Yeah.
record, and then they wanted to know.
Because you're likely
scores
to
or-
commit fraud.
Yeah.
Is the argument
If you're
in a bad position, I guess.
Ah.
And there's also, you know, when I worked for it was like a property investment company. The argument was that they needed the people to be clean because if the client base looked up who was working with them and things like this, so they might, you know, a company might screen you on that basis, which can seem unfair, but you know, it can affect certain job positions.
Yeah. That's interesting. What about if you have like loads of credit cards? Does that affect your credit score? Should you have like if you have credit cards that you're no longer using, like old credit cards, do you still keep them active or do you destroy them? Like how does it?
So we're getting into now what impacts the score or the rating.
Yeah.
And what so the score is up to the lender, and they might say, we don't like people to have more than one card. But the rating. But let's talk about the score specifically and the information that they use to consider it, because that kind of gives a nod to the rating side of it. What you talked about there was something called credit utilisation. So this is what percentage of your debt are you using on a monthly basis? And it's kind of counterintuitive, this, because let's say you have £10,000 worth of credit cards total. So you have 3 cards, each with 3,300 limit. You could spend 10,000, yeah? Yeah. What they want to see is a low utilization on a monthly basis. They want to see that you're not spending up to the limit all of the time and that you're paying that off. Or if you're holding a balance, so you've not paid it off in full each month, that it's not right up to the top. Being up to the limits on cards signifies to the lender that you're struggling, yeah? So they recommend a utilization below 30%, but you'll see improvements in your credit score as you pay off debt and you get closer to zero, right? Now, because the utilization is a percentage of the total amount of credit that you have available to you, by having more access to credit, you can actually have bigger balances, but a better utilization. So for me, for example, if I owe £10,000 on one credit card and it's 10K limit, that's 100% utilization. But if I have 4 credit cards each with 10,000 on and I still owe 10,000, I'm only using 25% utilization. Yeah. So they would see that as better because I'm not maxed out. So when you get your credit score, they'll often say improve your utilization. And you'll find that if a new card is added onto your credit file, that can actually mean your score improves because the utilization drops. Because you're using less of the available credit. It's like this guy's got the ability to blow 50 grand at any point and he's only spent 5. Yeah. So that must mean he's relatively sensible. So I never really close down old credit cards. If I'm going to close down a credit card, I'll close down the newest one because the age of the account also factors into the score.
So it's better if you have longer
It's a longer standing relationship with a provider. It signifies to other lenders that this person has been with that provider for a long time. They've been with their bank account for 15 years. They've kept them happy. So, whereas if it's like, oh, this guy's got nothing but new credit cards, they're all a month old. What's he about to do? Do you know what I mean? Is he about to have the time of his life?
That's what I did in Israel.
Okay, I'm just watching this back, and before T tells us whatever he got up to in Israel, I just want to add something in here. T asked me whether he should cancel old credit cards. Now, whilst what I said about credit utilisation and long-standing relationships is right, it's also true that having lots of unused credit cards can negatively impact your applications. So if you have a range of unused credit cards, then it could be a good idea to cancel some of them. There is no definitive answer here as all lenders look at this differently. But in general, if you've got loads of unused credit, close some cards down, leaving the oldest ones open. And of course, as I said, don't max them out. Okay, back to T and his wild times.
They gave me a credit card when I got to university. They offered me one in the post.
How dare they?
The cheek of it. I never had a credit card before, so I was like, yeah, I'll take it. Yeah, I was like, I'm lit. Went to Israel, blew it all, maxed out, was taking money out the cash machine, was in the clubs, everything. Came back, paid it off, closed my credit card.
So taking cash out of
it's a terrible idea. Yeah, I learned that the hard way.
Yeah, because it signifies to them that you're pretty reckless and that you're in need of cash. Yeah. So never.
Well, if you're given credit card to a 19-year-old and he's on holiday, what do you expect?
What do they expect?
They set me up, Damon. They set me up.
Well, let's just talk about that while we're on it, because there's an argument of, people say, oh, pay your balance back in full every month and blah, blah, blah. And if you think about it from a credit card perspective, they make no money on those people. What they want is someone who misses payments, who forgets to pay everything off in full, is deep in the debt. So
takes the money out in cash so they can hit him with the fees at the cash machine.
Yeah. You see that, like American Express provides loads of benefits to users. And I think the majority of people pay that off in full every month. So they lose money on those people. But there's a small proportion who can't, who don't. And they pay for everyone else to have all of those perks. Yeah, so I'm guessing what the credit card companies are trying to do is allocate the 5% of people or whatever that don't pay it back, that get stuck. And it's quite a nefarious industry in that way because they want you to
mess up,
to not pay them back. They want you to be incurring interest. There's a really good website called whatsthecost.com. I think we should pull this up actually, and we'll share a screen share on it.
What's the cost?
What's the cost? And what it does is it shows if you pay the minimum payments on a credit card, how long it will take you to pay it off. While that loads, because the internet in this house is a joke for some reason, it's taking hours, or maybe it's because the website's really old. But I used to use this website when I was talking to people about their debt solutions, and I was saying, they were like, oh, I just pay the minimum payment. It's like £5 a month. It's not that bad. Okay, so this is loaded. Like I said, we'll share this in the newsletter. £5,000 on a credit card. Let's say the interest rate's 25%. The minimum payment, so what they ask for is typically between 2 to 4% of the balance each month. So let's put it at 3%. So if you just maintain the minimum payment, it's going to take you 402 months to clear it, which is 33 years. And you'll pay back £10,000 in interest.
Off a £5,000.
Off a £5,000
loan.
So if you overpay that by £10, it would mean you repay it in 177 months, which is 14 years, and you save yourself £3,500 in interest. So if you're a business that wants to make money off people with interest, you want them all sat there making the minimum payment.
Yeah,
that's the person you would lend to, not the person who clears it in full every month.
But what about people, like, obviously I've only had one credit card in my life, but what about people who've had no credit cards ever? Like, you would think that they would have like the best clean slate, no debt, good record, attractive to all these lenders.
Well, someone who's never borrowed anything won't have a score.
Yeah.
It's not like they'll be zero. They just won't,
They
won't
won't
exist almost. But let's frame it from the perspective of, would you lend to them? So would you lend to someone who's never borrowed any money and never shown anyone that they paid it back? Or would you lend to someone who's borrowed lots and paid everyone back? Who are you most likely to lend to?
The second, but would you borrow to someone who's never ever borrowed before, or to someone who's borrowed before and they've had trouble paying it back?
Yeah, well, the argument might be that, you know, they would like that second person because then they can make money out of them. But
you need to have a history of
well,
lending.
This is why you have like these starter credit cards and credit builders and things like this. And it's why when you first get a debt, you'll get a very small starter balance. You might get a few £100s that you can borrow because they're testing the waters with you. So, you know, never borrowing is almost as damaging in terms of borrowing as having issues in the past, because you have no track record, especially if you're a ghost that's never existed before. They'll be like, who is this person and why are they suddenly starting to try and borrow?
So yeah, I think that makes sense. But what does your credit report actually like affect, apart from credit card, your ability to get credit cards?
Every form of lending. So mortgages and the rates there, the deals that you'll be offered, certain types of insurance as well. It might impact, like we said before, your jobs, credit cards, loans, overdrafts.
In fact, things like phone bills, like phone contracts, or not really?
I don't know, because there is an APR on a phone bill. It affects car finance.
Yeah.
You know the
insurance
the
finance.
rates that they offer you, because when they go away and look at the finance, they're applying a rate to that, and that will be dictated by your credit rating.
Okay, so it can affect pretty much anything.
Anything that's credit, anything where you're borrowing money. Buy now, pay later, maybe as well. Would be impacted by that. Phone bills potentially. I mean, they might say, you know, because they do a credit check, and when you look at your credit score, you'll see phone bills on there. You know, it's called a hard search, isn't it? When they've checked you for a contract to see if they can lend the phone to you.
Okay, great. So I think now I know how important credit scores are. And credit ratings. My score is 578. So how do I get to the lofty heights of your 700s, or the big swingers like Johnny over there with his 900s? How do I improve my credit score?
Yeah. So the thing about a credit rating and then a credit score as a visualization of that is it's a measure of your use of credit over time. So it takes time to improve, but there are things that you can do, some quick wins, some not so quick wins. The first thing is make sure you have a credit history. You could probably improve yours, because what's happened there is I had a credit card in the past, I abused it, and then I've never touched them again.
Traumatized, mate, traumatized.
There's not much track record there, is there, of a good relationship with credit. So maybe if you took out a new credit card and then over the space of 6 months you were buying on it, paying it off in full each month, that might make your score improve.
Nice.
Try not to max out the limits though. It's that credit utilization thing we were saying before. If you're hitting the limit every month, and remember, your score is a snapshot once a month. So they might not, they will just take a picture and go, this is your score for the month. And what they'll see there is, oh, the balance is like $8,000 this month. And, you know, even if you're spending on the car to pay it off in full every month, I would try and be well under the limit.
So 30% is a sweet spot.
Well, again, from a rating perspective, who knows? But from a score perspective, you see that they say 50%, 30%, 0. You know, you'll see improvements at these key milestones.
Okay.
But most of the scores now, they're quite responsive to any changes. So Clear Scored gives you a new score weekly. So if the debt's changed at all, you'll see fluctuations in the score over that time. From a lending perspective, because that's all that really matters. I mean, you know, why would you want to improve your score if you don't want to ultimately borrow? From the lender's perspective, they might say, we need a hard number of 30% or under, 20% or under, 10% or under. They're going to have their own rules in the background that we can't see.
Yeah.
You know, they're just looking to screen people en masse. Think of how many applications they get. They're not going to go, oh, you know, well, you had this last month and now it's this. They're just going to be like,
Bosh.
is it 30% or
Cut
under?
off.
If not, see you
Yeah.
later. Yeah. Make payments on time. Obvious big one. I would say as well, if you could make over the minimum payment, you know, again, minimum payments, whilst they're good for business, probably look terrible from a score perspective. And then don't withdraw cash on there, like we said.
Oops.
Yeah. And don't make lots of applications.
Yeah. So yeah, every time you make an application for anything, it comes on your credit, any sort of lending, credit card, anything, it comes on your credit file. And then if you make another one like the next
Yeah.
week, it's likely to get like rejected.
They call them
because
soft and hard searches.
Yeah.
A soft search is just a company just peering at your credit rating to have a look and see what's going on. A hard search is we've made an application and they list that application on there. Everyone's got to go through that process of making those applications. Every time you get a new phone contract, that you'll typically get a search record. What they're looking for in particular is he's applied for 6 credit cards in 5 weeks. He's been rejected by all of them. Something's going on there. Or why is he taking out so much debt? You know, try and avoid making lots of applications at one point, especially within, say, 6 months of a big event like a mortgage. If you're looking to borrow in 6 months for a mortgage, you know that what you want to be doing really is tidying up your credit file to make it look as good as possible.
Yeah.
Yeah, so slamming loads of applications and stuff through isn't going to help that. Closed any unused accounts. This relates to bank accounts. This was new to me. I mean, I've got like 6-7 bank accounts, haven't I? So it says that from the research that we did, that having 1 or 2 core bank accounts that everything goes through, that's seen as a good for your score. So you should close down current accounts that you don't use. Maybe that's what's dragging mine down, you know, like that and all of the borrowing I did for the studio. And then register to vote. This is the quickest one.
Yeah.
If you're not registered on the electoral roll, if you register, you'll probably see a jump immediately in the credit rating side of things. And then finally, what have we got? Oh, keep your personal info up to date. I'm shocking at this.
Oh yeah.
I moved house and my car's still registered to it.
Dude, my
6
car's,
years ago.
dude, I get like congestion charge to my old house. I get like my driving license is still to my old house. I hope I'm not getting in trouble for that. I need to sort it out. But yeah, updating all your documents is a nightmare.
Yeah, like my partner has a go at me about this because I'll be like, I've updated my driving license. She's like, yeah, but you need to update your V5 and blah, 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 blah. I'm like, why can't I just update one thing and everything changes? Why do we live in this system where I've got to call like 5,000 different people?
And let them all know. I
Yeah.
agree. Couldn't agree more.
Yeah. So keeping that information up to date. When you go on to your credit report, you'll see all of your old address history. And another thing to consider is have a look through it and make sure there's no errors within the credit, within the address history itself. So you might live at 26, Marlbury Avenue, but it's flat 26 Marlbury Avenue. And by having it wrong, they might not be linking up credit files that are linked to that address. It's really, the scoring side of it's quite it's not very intuitive in that sense. And we used to find that people would have a different phrasing of their address where they're flat 33A and it says 33.
33 and no A.
So by putting the correct one in, it then relinks all these files and stuff. And then it's like, oh, the score's just shot up or it's gone the other way,
So make sure it's accurate.
Going through all of your address history and making sure that the addresses are correct. It's a good place as well that, you know, if you need like 6 years of address history and you've forgotten it all, log on and typically it's all on there and you can get all the postcodes and stuff.
And all the dates.
But yeah,
cool.
the quickest ones will be the electoral roll and making sure the address history is up to date, closing down any bank accounts, getting the credit utilisation down. But really you should be looking at how can I improve my score over the next 6 months, not over the next 6 weeks.
Yeah.
Yours is 6 years.
Stop it. I haven't had a CCJ for a good couple of years.
Yeah.
Okay, so probably only like 2 years left.
Yeah.
If you enjoyed today's episode, you're going to love this one.
And if you want a summary of everything we discussed today, then check out the link in the description where you'll find our newsletter. Thank you.
Cheers. Ta-da.
Bye.